Welcome to Real Estate Investing Abundance, the show for busy, fulfilled professionals like you to learn how to develop financial independence built on solid, passive real estate investments. Now, here is your host, Dr. Alan Lomax.
Hello, enlightened investors. I'm so glad to be back with you again today. Thank you for sharing this moment with us as we take a look at how investors in the real world invest. With us today is Victor Bell, who is a real estate investor. He's the CEO of Bell Capital, a best-selling author, and a speaker on business and money. So, Victor, take us into the show and share a memorable experience that helped you to be the person you are today.
Awesome. Hey, thanks. First, thanks so much for having me. I appreciate everything you're doing for the listeners. I wish I had this information when I started. Memorable experience for me, which was when I got into real estate. I got out of the military and I went to college off of the college free money. And they said if I came back, I was going to owe them money because they were like, hey, you got to keep showing up here. So, and I got in trouble. I was on probation and I had to get a job, and again, I kind of burned those back bridges, right? Military, college. And then working at this job, people had been there for about, 10 years or so that hated it. I was new. It wasn't that I hated the job. It was that I knew that there was nowhere else to go from there. Had a situation happen driving home and I fell asleep behind the road.
Oh, no.
On the side of the road there. And I was like, okay, I have to do something different. That next day, I went to work and went early to work, actually, and went to a bookstore. There's probably not around anymore, Hastings. And I sat on the floor and I found a book on the shelf by Ron LeGrand, and it was Fast Cash with Real Estate. And that first year, I did $1.2 million in real estate. But the most impactful moment for me was really recognizing that, like, what I was doing prior to that, it wasn't really going to take me anywhere. Now, there's people who are in that space and they're happy. That's fine. But I recognize that I knew there was more to me. I knew that at a younger age, but that was really the defining moment of who I became. And I've been doing that ever since then. And that was in the mid 90s, somewhere around 90, I would say about 97, 98, somewhere in there. Time slips me. I'm almost 50. So, I'm still a young man, but
yes,
definitely.
You are. You're just a child. So. Age is relative.
It is relative.
Well, Victor, that's a very interesting and compelling story. Tell us the beginnings. How did you first of all, obviously found the book, which I'm sure didn't do a whole lot besides really pique your interest. Most books are not that detailed. So how did you get started?
Being honest, I took that book. I went there for about a week reading the book. Then I eventually bought the book and I went to my job during the evening times and I did exactly what that book said. To your point, there's not a lot to that book. There's a lot of things that were not there. And I took the book, I set it on one side of the table. I took the newspaper at the time, the Yellow Pages, which is not Yellow Pages, but the actual newspaper. And then I cold called every phone number in that book that had, house for sale. And I read the script in that book. And I eventually got to somebody who was like, yeah, sure, we'll do that deal. And then I hung the phone up because I was terrified because I had no idea what I was doing. There was no formidable chapter on what to do next, to your point.
At least it lit the fire. So you called everyone, which in and of itself is an accomplishment to be for sure, because I'm sure there were a lot of disgruntled people on the other end of the line, but you found one that would do what you needed them to do. So what was that you needed them to do?
Sell their house to me.
They were selling their house, but apparently you wanted some kind of special terms or something, I'm assuming. So,
the book didn't have a lot to it. It was like, see if you can get someone to sell their house to you at a discount. And I think it's probably the pad. Is that the least amount you can take for your house? Is that the best you can do? Like, that was the extent of the negotiation in the book. But what happened was I cold called. The book also said cold call and find like private lenders, investors, things like that. So it was like call mortgage companies and see if they have an REO department and talk to someone there. So I was calling all these, I cold call out of the phone book at the time, the Yellow Pages, mortgage companies to try to now find a loan partners, things like that. And I got on the phone with Bob and Jamie. Jamie actually is my investor relations manager in my company now. And they were like, you have no idea what you're doing. How'd you get this? Why don't you come in? When they found out I went from the A's to the S's in the Austin, Texas phone book, they introduced me to my first partner. So we did $1.2 million in deals that first year. That one owner that I cold called, they were like, Bob and Jamie were like, hey, call him back and see if he has any other properties. So I did. He had 300 properties and he was willing to offload as many as he could on me, which was good. And we put that partnership together. We did a lot of deals together that year, and I learned a lot. But ironically, the house I called on was the only house in what they sold me. The rest of them were multifamily properties. So that's really how I got into the multifamily investment side. And then, naturally, I've accelerated it. We moved to Hawaii. I did deals there for 17 years in a bunch of other states. And now we have our real estate fund. So, but that's kind of how that went. So that book was, yes, it was a catalyst, but a lot of it was my own actions. And I always tell people, I'm like, all information is great information if it's usable and you can apply it, and there's enough pressure on you to make sure you stick to it. Real estate's pretty simple itself.
It's interesting that, you were just cold calling just anybody in the phone book, and you didn't even know if they were homeowners. Is that?
No. So I called out of the newspaper for sale.
The newspaper for sale by owner. Oh, okay. So you did know they were selling. Okay.
Yeah. So they weren't upset. They were happy to get that call.
They were happy to get that call. So what was it they weren't happy about?
Oh, no, I said they were happy to get those phone calls.
Oh, okay. Okay. So you only found one person who was willing to work with you. What was the issue with the other houses? They just weren't selling at a discount, or what was the deal there? To
be honest with you, I don't remember. I was reading the script. Because again, even the way that I buy houses now, when I do buy houses, they're not for the fund, they're for my personal investments subject. So even then it's a very different strategy. But to your point of those people, if somebody says, hey, are you interested in, there's a price right there in the newspaper. Same way as if someone found something on Zillow, nowadays, and they called and someone specifically has a price. It's like $1 million, when you call, which is, to the despair of a lot of people who cold call. And then you ask them, hey, what's the least amount you could take? Well, there's $1 million on the paper. What's the confusion? So because when I'm a seller, I want what I want, when I'm a buyer for houses, I'm negotiable, as it relates to there. Multifamily is a very different animal. Naturally, that's our bread and butter, multifamily, but we do that. So, but to your question, like there was no disgruntledness. And then calling out of the yellow pages, we called mortgage companies, saying, hey, I have a potential deal. Do you have anyone that would maybe be interested in partnering with me? What kind of financing options do you have? So they weren't disjointed phone calls from each other. They were, I have naturally I have something to offer the person on the receiving end. So they actually matched up. There was maybe I called too late, but that was all.
Well, that's interesting. That one phone call led to that snowball effect. Don't expect that happens too frequently, but it was good that it certainly happened in your situation. But it wasn't just the connection there with the seller that was important. The connection also was with the mortgage broker. So give us a little bit more detail on. That was a cold call to a mortgage company. How did that go from a cold call to a relationship?
I had a deal that made sense. I always tell people, like, if you call someone with something that it's not to their benefit too. So like when I called Bob and Jamie and I talked to Bob, Jamie, like I said, is still on our team. We just had our team call for Bell Capital and we were all on. But that call led into a long-term relationship because they were also buyers. They fund investors. So they had a big pool of investors that they can say, hey, you know what? I got a guy that has a property. He's pretty new. And, ironically, they also, at the time, they were also involved in the education space of selling information. Because this was back in the 90s where it wasn't a bunch of internet information and a bunch of people. So Bob and Jamie actually bought and sold residential notes at the time. Okay. So the book that I bought by Ron LeGrand, they were actually on the speaking circuit with Ron LeGrand. I didn't know that. It was just, to your point, sheer coincidences. But what really drew them into liking me, and I'm not special. I share everything with the listeners. It was a Austin Yellow Page phone book. I called from the A's to the S's before I got anyone that would even pay attention to me. So that's really why they were like, how'd you get this number? And then when I told them, Bob was like, I wish I had 10 more people like you in the office. Do you even know what you're doing? And I said, no. And he was like, why don't you come in tomorrow? Let's meet in person. I'd like to meet you. So then he was like, hey, come into the office. Let me show you what I do. And I told him, about the book. And he's like, yeah, like I'm a speaker with Ron, we're all this. And he was like, come and learn, come sit and learn. And then I would come in so early and just sit there. Then he would start limiting me. He was like, hey, Vic, why don't you only come in on Thursdays? But I was a sponge, because
Yeah.
to the part of what you asked in the beginning, like I knew that I needed to make this work. Unlike some people who are just dabbling in real estate, like it became who I am and my life, really, like my career. And for people who take that serious, which is why we have the fund, to be able to talk to investors, you want someone like that is going to be a great fund manager, asset manager. He's going to, our deals are sometimes 10 years long. You want somebody who that's what they do as a profession.
Right. Yeah.
So I think it's wise to do that.
Why is it that the old way of connecting doesn't work? And what do you classify as the old way of working before you tell us why it doesn't work?
These are just my experiences. I can only come from where I have, because my way of connecting people with people are different. So a lot of the go-to meetings and seminars and conferences and kind of shake hands and pass business cards and stuff like that. Some people do that. I find that there's a very specific group of people who still do that. Things move a lot faster now. Social media, LinkedIn, Facebook, Instagram, LinkedIn, YouTube. Like, we were working on a deal and I Googled this group and they were nowhere to be found. And I got back on the phone with them. We were talking about a deal that was pretty big. It was a $90 million project and they were looking to bring me in on something. And I was like, hey guys, like, you guys are a ghost online. Like, there's no way for me to find you. I was like, there's two problems. There's a scam report, two scam reports. And they were like, that was nothing. We had a bad situation. The owner didn't want to deal with it. And it's only two things. I was like, well, two things is 100%. I was like, you need more stuff out there that explains that. Maybe. I was like, but I'm out of this deal. I was like, I don't want to be involved. So to me, being able to see somebody that's a real person, have a little bit of information on them, somebody else has either done business with them, that's valuable. So I think that's a better way to connect with people nowadays, to put a face to a name, like being on this podcast. People that meet you, all your listeners out there, they're comfortable. You show up consistently over time for them. And I think people who aren't willing to do that, it's really hard to play catch up. You have 10, 20 episodes and somebody doesn't have any and they go, yeah, we don't do that. I don't like that kind of stuff. They're going to go with Alan.
Enlightened investors, if you haven't done so already, be sure and click that like button and also click that share so others can take advantage of the content. And finally, be sure to subscribe so you don't miss a single one of our upcoming episodes. Without an online presence today, like you said, you're just a ghost. And I'm not going to name the state here, but my dad has owned a property in this particular state since the 80s. So we're trying to sell this property because it's non-productive property. And my sister is taking care of his estate. He's incapacitated, essentially. And so she said, well, let's go ahead and sell this property. And I said, well, okay, no problem. I can take care of that. So I started researching this property. I couldn't find anything online in this particular state. I had to call the Register of Deeds. And I said, I can't find you online. And she said, yeah, that's right. You're kidding. He goes, nope, that's the way it is. They were extraordinarily cordial in this office, and I got everything I needed. But I don't know if it's the whole state, but certainly that one particular county in that state doesn't have access to these public records online. It just blew me away. Anyway, sorry about that tirade there. Well, well, obvious ways to fail when investing with a manager or a deal. What are the obvious ways?
One, not knowing enough about that manager, not having some type of, if he doesn't have some way to be, hey, let's be some level of transparency, not being an operator at some point. You have a lot of fund managers who've never been operators. They don't really know. So they're we call them, kind of Excel jockeys, or you get a deal and it looks great on paper and you get there and it looks like something else, things like that, or just not being able to get in contact with that person. There's these layers away from these people. And it's fine if, because I find that a lot. You have a fund manager that's willing to get you in, sit down and talk to people, answer all their questions. And then later, once you're in, it's like they're ghosts. You can't find them anymore. That's that. And then the multiple, we kind of know this just from real estate in general, multiple exit strategies. But what happens when things go sideways? Have they actually been through a full cycle? As it relates to the real estate cycle, the 10-year cycle that we are all seeing, or have they been through multiple? Someone asked me the other day, like, tell me about a deal that didn't work. And I was like, oh man, pull up a chair. Let me get you. And it's not about bragging about losses. I mean, people like to go into those things, but it's about being able to say, hey guys, look, we've hit snags before. Here's what we did to get out. Here's how we made our investors whole. Here's what we did to continue on and accelerate the process to continue to move forward to do deals. Like all those things are valuable. They're really valuable. And, those are obvious ways to fail to not know those things. But I think one of the bigger ones is to have someone who really is not an operator. They rely on a team, they tell them what's what, and they're basing a lot of their financial decisions off of spreadsheets, something that they can't see, smell, and touch. But this is real estate. Somebody who's not willing to fly out to a site, take a look at it. Now, I get it. Steve Schwarzman can't fly out to every property. He has someone in the real estate team to do that. But rest assured, he gets those reports. There's a big enough operation to do that. Most people are not dealing with Steve Schwarzman, Sam Zell, and Barry Sterling. So those are some of the things that I like to share with people, because we try to provide these things for people and to make sure that they're a part of our family. They're not just investing with us. We are going to be available. If I can do this for the next 50 years of my life, I never want to be that busy where I can't take my investors or my partners or people's phone calls. That's important to me.
Well, what is one major thing that any investor should do in today's market?
Honestly, if you are looking to connect with an investor like myself, is share with people how you're going to make them money. Like I always tell people, like everyone dances around it. We're in the business of making money for people. Whether you're buying a deal for yourself, it needs to be profitable. Whether it's a short-term hold or it's a long-term hold, it has to make you money. I think people fail there. I think people don't like to dance around that. My wife tells me you're extremely forward in that respect. And I was like, yeah, I don't like to waste people's time. I want them to know what our relationships will be built off long term. And if we're talking about business, I want you to know that my goal is to help us all succeed financially and make money. I think a lot of people dance around that. It's like, let's meet up at Starbucks. Let's go coffee. I'm around some pretty heavy hitters and they're like, yeah, Vic, what's up? How much money are we going to make? How long is it going to take? I'm in. And then they're done because they're busy running their businesses and their companies. They appreciate that about myself. And I learned from them quite a bit on how to maintain that level of transparency, and build relationships further after that. Now I know we're going to make money. So come to my kid's birthday party. So, yeah.
That's interesting that you say that there are deal makers out there that dance around that question of how you're going to make money, and they get investors. How could you do that?
Because they're nice.
They're just nice. And so
people like them because they're nice, and then later find out, well, they're not making any money. I'm still nice, but I'm very aware of my niceties go towards a specific thing. And I think it's valuable because, the old way, build relationships, make friends. Yeah, that's awesome. Do that. But at the speed of information and the way that people who are busy, like when I get off of this podcast, I'm going to a conference, an investor conference, a mortgage broker conference. Then I got an investor meeting, come back here, do, broker calls, follow it with my teams, field deals. At some point, depending on who you're sitting in front of in the moment, they're going to give you 100% of their focus, but to misrepresent their time and focus is wrong, depending on the level of the totem pole they're on. If you're, a lower level person, you'll sit and do lunch because you're avoiding work. But most entrepreneurs at the higher up on the totem pole, we're movers and shakers and stuff. So, yeah.
Well, share with us one of those deals that didn't go as expected.
Sure.
How did you deal with that? How did you rectify it? How did you come through that particular situation?
Whoa, let me tell you. I always get to those. So we had a deal. This was in 08, 07 or 08 or so. Kind of that. It was a transit. Really, it was like this 07, 08 transitioning into 09. So, I like to share this with people. Like all this talk about real estate cycles, market cycles, all that wasn't a conversation then. There was no, hey, here's the cycles you need to be aware of. There was just a hammer.
Everything's going to go eternally up and never come down. Yeah, that was for sure. 2008.
Yeah. Strippers, buying houses, all that stuff. We bought an apartment building in Ohio from Hawaii. I got the deals on a seller financing situation. And this was all the craze at the time when it was like reposition. They don't call it repositioning anymore as much. They say value add.
Mhm.
So I was like, oh, it's a reposition deal. It's in Ohio. I was chasing, that's a mistake people make. They chase money somewhere else rather than just focus on your own backyard. Yes, it's more expensive where you live, but you can mitigate the risk differently, right? As opposed to chasing yield, halfway across the planet, which I did and I learned. So that deal, we had a project manager who was also the property manager. We bought it. It was about 40 doors or so. And then it was about 50% occupied, already a big no-no from there. So we put money in escrow. We gave our project managers the ability to write checks from there. I was supposed to be a signature. They were a signature. After a while, with the time differences being in Hawaii, they were in Ohio. I was like, you know what? Just do it. Don't worry about it. We'll ledger later, even though it was an escrow. So naturally, you see where the story's going, right? So we're good. So we're all so they're writing checks. I'm okaying them, when I wake up, and then I was going down there. It wasn't like I wasn't flying down to see the property. They were fixing the units. We were losing tenants that weren't good, not paying. This thing was a big monster. It was a Section 8, primarily a Section 8, all the tenants were Section 8. All 3 bedrooms were the units mix, which looking back now, being a lot heavier in this business, I'm like, why would you buy all 3 units, all 3 bedroom units in a location like that? So anyways, as you can tell, that deal tanked. I had a broker call me and say, hey, Vic, he was like, you may need to come down here. That property manager there, we went to see some other assets that these guys manage that were out of state owners, and it's a bad show. And he went over to my property, saw the same thing. So I called those guys. They didn't answer. I flew in. What they were doing was fixing up a unit for the ones that I saw, and then stripping the unit back down, countertops and all this other stuff, and then taking it to another site. That's how they were doing that, and then not fixing the properties. Then they filed for bankruptcy and gave everybody the finger and rolled out. So there was a class action lawsuit against those guys. I didn't join in on that. I know those things tend to go nowhere. Nobody ever really gets any money back. People steal because they don't have, not because they do. So at some point, we kept paying on that thing out of pocket every month. In Ohio, it's cold, it's snowing. We had equipment leases for snow equipment and stuff. I didn't know that. I'm from Hawaii and, originally from Texas. We never did snow stuff. So there was a lot happening. Eventually, I had to sit down with my wife, who was pregnant with my twins, and I was like, hey, babe, we can't afford it anymore. So we refinanced a couple of properties we had. We paid off a couple of investors that I had in that deal with me. And we ended up having to file for bankruptcy. I didn't know. I thought the whole world was just coming down on Victor. I didn't know this was already happening to other people because, again, I was in the trenches. This was going to be like my deal. We were going to make like 800 grand on this deal. Yeah. Right. So I was like, this is a winner. Like, I know it. So when that happened, we had to go through bankruptcy. We had to go through court. We had to get attorneys. We had to kind of turn in all these papers. And everyone was like, dude, you guys make a lot of money. Where's the money? And I'm like, I'm a real estate guy. Like, we reinvest, like you're a true real estate entrepreneur, because people confuse real estate entrepreneur to real estate investor. One invests money and makes a return. One makes money off the real estate. So, we wear both of those hats. So anyways, we went through that bankruptcy scenario for 12 months of them, basically going through every crevice we had with a magnifying glass and a flashlight. And they're like, okay. So we fired our bankruptcy attorney because he was trying to get us to borrow money to pay more money to him. And we're like, you said that if we borrowed money that without the wherewithal to pay people back knowingly, that was fraud. Mm-hmm. He was like, yeah. I was like, so you're asking us to commit fraud when you see what we're doing here? Like, we're not at fault. And he was like, yeah. I was like, here's where we are. And I was like, you're fired. My other attorney, who was a friend of mine, she was telling me, she was like, stop bringing your wife to court. She cries, she breaks down, she's pregnant. It looks bad. So we had to handle that, and they kicked our case out. And I know, and I apologize about the time, but they kicked our case out, and the judge was like, hey, Vic, you didn't do anything wrong. The trustees are kind of playing that game where they're trying to get you to turn in documents in 31 days or 30 days. You don't understand the legalities. So you can refile after 180 days or not. And I was like, Judge, we didn't do anything wrong. All of our creditors, they're fine. We've made calls to them. They're like, hey, Vic, don't worry about it. And it got kicked out. So after that happened, I bought $11 million worth of real estate over that next really 90 days or so, because we started putting contracts, and I only focused on Hawaii at that point. Multifamily, Hawaii. I raised the money. I did the right thing because it was the same strategy. So that was a deal that we had to turn around. And I stayed in those deals with that partner for the next 10 years, which became the investment strategy that we use now for the fund. Big lesson from there, I became a project manager. I became an overseer of our management team. I became very diligent with everything that had to do with our assets. But that was a deal that was a great lesson for us. And we paid our investors back, and, we learned, about paying your investors back before you file for bankruptcy too. Like they're like, hey, you can't choose who you want to pay in 91 days. So, they got called to the carpet too, but all of those things got worked out. But I share this, hopefully for the listeners, like, look, you have to have people on your team with a few scars, right? I'm not talking about the negative scars, complaining about the market. That was a market issue, but I didn't know it. All I knew was the waves came down on the Bell family and we needed to paddle back to shore. And then once we got back to shore and the waves settled, I was like, hey, I will never let this happen to us again. I'll never not be aware, which is why when people hear me talk, I'm like, hey, you guys need to focus on your own backyard. When you disperse your troops some other place, it goes, bad there. You can't get back fast enough. So just invest here, figure out how to do it, get with people who are doing it. And then there's always a way. Real estate's a very, it's versatile. And I love those things. So that was a great question. Thanks for allowing me to share that, because I like sharing that conversation with people. One, I turned it around and we've been extremely successful because of that scenario.
Well, thank you for sharing that. That's not always a pleasant thing to share, but it's very informative. And I totally agree with you that if you're going to invest with a sponsor, you need to know that they have been through whatever. They've been through the ups and the downs. Yeah. And obviously that was definitely a down period. Not a pleasant time for you and your family, I'm sure.
Did you
but
feel
glad to see that you recovered pretty quickly from that downturn.
Thank you.
Well, Victor, tell our audience how it is that they can get in touch with you and what it is that you have to offer.
Sure. Everyone can get in contact with us. Go to bell-capital.com. That's our investor site. You can go there. You can either schedule a call with us, or you can go to the investor portal. It's an accredited only fund. You can take a look at the paperwork, things like that. If you have any questions, feel free to reach out to us. Myself or Jamie or Corian will always get in contact with people. We're willing to talk. It's a real person. You can go to bell-capital.com/book. You can get a copy of the book that we have. I have a book. That's it. It's a free copy. It's a digital copy. And it just goes over my do's and don'ts, as well as, how we do deals and how to actually create wealth through apartment buildings. I love that part with people. Yeah, I mean, there's a bunch of other things too, naturally, but those are the most simplistic ways. bell-capital.com, or they can get a free copy of our book. And that's bell-capital.com/book. And any questions anybody has, I would love to have that conversation with people. Any way we can help, we're here.
Well, terrific. Viewers and listeners, we'll have all of that information in our show notes. Victor, it's been a pleasure. Thank you so much for sharing your ups and your downs with us. It's been very informative. Thanks for being with us today.
Thank you so much for having us. Like I said, I really appreciate what you're doing. Had content and information, and guys like yourself been out there when I got started, I would have learned quite a bit. So thanks for everything that you're doing for people and your listeners. I really appreciate you.
You're welcome. Enlightened investors, don't go yet. I have just a couple of quick requests. You know the drill. Like, share, and subscribe. But we also need your help to build our audience, so please go to your favorite podcast app and leave us a 5-star rating and review. I'll be most grateful. Until next time, prosper and live abundantly.
Thank you for tuning in to Real Estate Investing Abundance, brought to you by Steve Talker Capital, a company working for passionate professionals like you to develop financial independence built on solid, passive real estate investments. As part of our efforts to make the world a better place, Steve Talker Capital contributes to activities and organizations committed to better understand the equine. These endeavors attempt to enhance the human treatment of horses worldwide. Steve Talker Capital, working for a world where all creatures, great and small, flourish abundantly. For resources to develop your financial independence, connect with us at stevetalker.com.